Hello and welcome everyone to the channel. On here, I like to share my passion for investing by talking stocks, investing principles, and lessons from the greats like Warren Buffett. This is a community for investors that like to keep it simple. We buy great businesses and ideally, we hold them forever. We don't worry about day-to-day price fluctuations, but we do like the periods when the market is down because that drags good businesses along with it and allows us to buy them at a lovely discount. We focus on fundamentals of the business and we do our best to understand what the future economics of the business may look like. Today, we are discussing one of my favorite stocks in one of my favorite industries. That is Microchip Technology in the semiconductor industry. The ticker is Mchp. Microchip is not as well known as other chip stocks such as Nvidia, Texas Instruments, or Advanced Micro Devices. However, it is a business that keeps compounding quarter after quarter, year after year. We are going to look at their fundamentals today and assess if they are undervalued in what has been a pretty rough 2 months for chip stocks. The semiconductor industry is famously cyclical, and that can be highly frustrating for the short-term minded trader. But since we have an investment horizon of 10 plus years, we know that over time, the semiconductor industry and the businesses we own will grow. The industry has been on the downslope in 2023, with a couple obvious exceptions like Nvidia, of course, but we know the industry is vital to the modern economy, and growth over the next 10 years should far outpace the general economy. If we look at this chart here, you can see that clearly we are in the down trough of the cycle, and while I'm not going to make any predictions, I do expect growth to pick up a little bit next year in 2024. According to one research firm, the total market size for the industry is expected to grow to 1.9 trillion. Yes, trillion by 2032. That is a compound annual growth rate of a staggering 12.3%, and I plan on getting in on that action. Without further ado, let's get into it. Please, if you haven't done so already, hit that like button for this amazing video and subscribe to the channel. It really helps me out and lets me know you want to be a part of this community of quality investors. Also, hit that notification bell so you can know right away when I post more great content just like this. Starting on the investment summary tab, we can see right away that the price for this stock is at $77.95. However, just quick glance at all the metrics here, I see a lot of green, which tells me there's a lot of good things going on here. So let's see, we have our PE ratio of 18, which is well below the 5 and 10 year average, as well as all the other ratios I like to look at are well below their 5 and 10 year averages. Our gross profit percentage here is at 67.85%, also above their 5 and 10 year averages, as well as their operating margin. Their free cash flow conversion rate, a little bit below their 5 and 10 year averages, but that's okay. And we come down here to one of my favorite metrics, the ROIC, nearly 20% trailing 12, which is far above their 5 and 10 year averages, and their return on capital employed as well is far above their 5 and 10 year averages. They also pay out a dividend. This year it's going to be $1.64, giving us a yield of 1.9%, and they have a very healthy free cash flow payout ratio of 27.4%. We can also see that compound annual growth rates are very healthy for Microchip Technology. They have 14.7% for revenue per share growth over the last 10 years. They've been growing their gross profit margin. They've been lowering their operating expense margin. Their EPS has grown 29.21% over the last 10 years. They have a decent dividend growth of 6.8%, and most importantly, their free cash flow per share growth has grown nearly 20% over the last 10 years. One thing I like to do is score my investments, and if we look at the score for Microchip Technology, you can see that they, on a 1 to 5 basis, they score quite highly for the revenue per share and their earnings per share growth, as well as their free cash flow per share growth. On a dividend basis, they have a fairly attractive yield at 1.9% and decent dividend growth of over the last 10 years. I'd like to see that a little bit higher. Free cash flow payout and earnings payout, though, are both relatively healthy. On the economic moat, what I'm looking at here is gross margin and CapEx as a percentage of net income, SG&A as a percentage of gross profit, interest expense as a percentage of operating profit. And we look at all of these combined here, all very healthy metrics. I give a weighted average to each of these categories, and that gives us a score here of 3.4 for growth, 3.75 for dividend, and 4 for economic moat. Just for reference, economic moat above a 3.5 is excellent and should expect very high returns with that sort of economic moat. That gives us a total weighted average score of 3.77. Looking at the 5-year chart, we can see very decent growth over the last 5 years. Obviously, very cyclical due to the nature of the industry. But if we look at the compounded annual growth rates over the last 3, 5, and 10 years, all of these are very healthy and well above the S&P 500. Year to date, they've been a little flat. They have grown 10% year to date, but I guess they've been pretty flat since about the beginning of May. And honestly, I do expect this to be pretty flat the rest of the year before we see some real pop in the share price once the industry gets back to its growth mode. You can see here on their charts that Microchip Technology does nothing but grow. Even in economic downturns, they've grown their revenues and they've grown their net income. You can see they've had a couple quarters where they've had some down earnings per share. Again, that is the nature of the industry, but overall, it's an upward trend. They've also reduced their SG&A margin, as well as very well increased their operating margin, which is something I really like to see. Looking at some balance sheet and cash flow metrics here, especially on the operating cash flow, CapEx, and the free cash flow chart, I like this type of graph where it's nothing but growth. And that's what Microchip Technology does. They just compound their free cash flow. And finally, if we look at their margins of dividend, you can see that healthy gross margin growth as well as that net margin growth here has really popped in the last 3 years. The yield has come down because the share price has risen quite a bit, but their free cash flow margin has also popped a little bit in the last 3 to 4 years. And this is something I really like to see. See that free cash flow payout percentage has decreased despite the growth in their business. And you can see that the dividend has grown over time also with that payout percentage coming down. That's a sign of a very healthy company. Coming to our growth rate tab, I'm projecting here revenue growth this fiscal year of 3%, net income margin of 27.8%, earnings per share growth of 9.67%, a free cash flow conversion rate of $1.34, which is going to be a 3.5% growth over the prior year, and a free cash flow margin of 37%. I like to see that this net income margin here is a bit higher than what their 5 and 10 year averages are, but as we saw before, they have a very healthy economic moat, and that should increase margins over time. Same with their free cash flow margin. Going forward the next 10 years, we can see the growth rates down here for revenue all the way through year 10. And ultimately that comes out to a 3.65% compound annual growth rate, which in my view is very conservative given the recent growth of this company. Their last 10 years has been 18%. The net income growth rate, 5.95%, also very conservative. And let me quickly explain the net income multiplier. That is my projected net income growth based on earnings per share. And if we can see here that the net income grows slightly faster than the earnings per share, so I'm putting in a multiplier of 105%. Earnings per share growth here, we can see that I'm projecting 5.8% compound annual growth rate here. Also very conservative given what they've done in the last 3, 5, and 10 years. And finally, that brings us to our free cash flow projection. I'm estimating a free cash flow conversion rate of $1.35, which is well below their prior 8 quarters and 5 and 10 year averages. But even that brings us to a 5.5% compound annual growth rate for free cash flow, with margins ultimately ending at 45%. And I definitely expect that to be the case given their very healthy economic moat. All right, well, how does this spit out our discounted cash flow model? Coming over to our discounted cash flow model, we carry over the projections from the previous tab, and we see that here is our free cash flow for the next 10 years, and of course, discounted back at a discount rate of 8% with a perpetual growth rate of 3%. That gives us an intrinsic value for Microchip Technology, $74 billion, with 551 million shares outstanding. That's a discounted cash flow price of $134.21. And on to our dividend discount model. We can see here that the dividend growth over the last 10 years is about 6.8%, but has really grown quite a bit in the last 1 and 3 years. To that point, I do expect a little bit less growth than 39% over the next 5 years here, 8% in 2025, 12% in 26, 8% in 27, and 15% in 28, corresponding with their pops and growth of free cash flow. On a perpetual dividend growth basis, I'm looking at 5.75%, a little bit less than that 10-year, and you can see that there's many years where they actually don't pay out that much, and it's more recent where that dividend payout has occurred. That gives us a dividend discount price of 80.84. Finally, looking at our exit multiples model, I chose as peers for Microchip Technology, Texas Instruments, Analog Devices, NXP Semiconductors, On Semiconductor, ST Microelectronics, Global Foundries. And that gives us an average PE of 18.99. And using that average, that gives us an exit multiple price of $82.02. All right, and now we get to see how all of that wraps together. We have a DCF price here of $134.21, dividend price of $80.84, and of course we are including it in our valuation, an exit multiple price of $82.02. And I like to point out that the Grams model is not necessarily applicable to this company, as it is a high growth company, so we're not going to include it in this valuation. So what is our valuation average given the current share price of $77.95? We come to a valuation average of $113.22, a massive upside of 45%, and I'm putting in a pretty healthy margin of safety here of 20%. That gives us an acceptable buy price of $90.57, and that is a buy recommendation. Full disclosure, I do own shares in Microchip Technology, and I plan on adding more so long as it's below this buy price of $90.57. I expect a bright future for Microchip Technology, as they are one of the largest players in the analog semiconductor space, focusing on microcontrollers and microprocessor products that not only are programmable, they also create a very nice network effect, as once you buy their product, you're also locked into their software and their service. That concludes our episode for today, and remember, this is not financial advice. Please, if you have not done so already, hit that like button. This has been an amazing video, and do not forget to subscribe to the channel. It really helps me out. And remember, hit that notification bell so you can get more great content. Thank you, and happy investing.